to me at least, that the Fed is so politicized that it is trying everything that it can, especially with its verbiage, with its language, to put the economy into a recession. I think they're trying to stop Trump dead in his tracks. It was
so you think
enough
this is anti-Trump? You don't think they would have done this if there was a President Hillary Clinton in office?
I do not. I absolutely do not.
Talk about a bombshell. Danielle DiMartino last night accusing the Fed of playing politics, actively working against President Trump and working towards a recession. So is this the latest battle in the war between economic nationalism and globalism? Here to continue the debate, Jeffrey Cleveland and Shelby Holliday. Shelby, that's tough stuff, but I got to tell you, a lot of people have been really anxious with the Fed and their relationship, potential relationship with Donald Trump. And I think this kind of stuff will pick up because it was really those minutes yesterday were pretty tough. I mean, they damned the rally. And by the same time, they seem to diss whether or not Trump could even get most of this stuff done.
They expressed skepticism, but they're also saying what everybody else is saying, including Paul Ryan, which is we may not see tax reform until 2018. We may not see the needle moved on these big fiscal stimulus policies until next year, which is scaring investors. I mean, this was baked in that we were going to get these things done in 2017. So they are expressing doubt. I mean, Donald Trump also started a bit of a war when he said Janet Yellen was political, and you could make the case that she is, you could make the case that she's not. But in general, the Fed's looking at inflation, unemployment, they're looking at their targets.
So why are they talking about the stock market?
Well, I think part of it is they have to temper expectations that...
Why?
We have a president who says he'll grow the economy 4%, and I think the Fed hears that and says... Our members don't necessarily believe we'll hit that, but they haven't said the economy won't grow.
You know, here's the thing, though.
They walk a very fine line.
Jeffrey, they didn't walk that fine line with those minutes. In fact, the Federal Reserve understands more than anyone else that it's credibility, that it's the ability to be able to jawbone things up and down, not necessarily the actions, you know, and they know how to use that tool as well as anyone else, and so does the White House. If President Trump says we can get 4% economy and enough people believe it, guess what? It helps a lot. It becomes self-fulfilling to a degree.
Sure. I mean, Charles, I think central bankers have enough on their plate. You know, they can focus on inflation. They can focus on the unemployment rate. But I think they should stay away from my equity portfolio. I don't need a central planner, you know, tinkering with that and telling me where the proper valuation is. Let investors sort that out. And I agree with you. Stay focused on the macroeconomic fundamentals. And on that point, Charles, you said it in the previous segment. Well, I mean, the key thing that I would tell listeners and viewers to look for if they're worried about a recession are those layoffs, the initial claims. And we're at the lowest level on layoffs since the early 1970s, when we had a much smaller population. So I don't see any kind of hints of a recession on the horizon. And I don't think moving up the federal funds rate, you know, incrementally is going to push us into a recession.
Well,
we
were talking about jobs. Charles thinks the economy is going to add what? 270,000 jobs.
270,000 jobs. But here's the thing: irrational exuberance. You remember that famous phrase from Alan Greenspan? It knocked the market for about a month, right? You know, then all of a sudden we rallied for another 3 years, and I'm wondering, people who sold their stocks on that news, maybe they regretted it a year, 2, 3 years later, not 4, but certainly in that time frame.
Right.
And I would have thought that would have been the lesson, and it does feel like, why would the Fed step out of this particular lane that's been established from them, from historical precedent, and focus on the task at hand? Because they've got a pretty tough job, and it involves credibility, Shelby, that's already on thin ice.
But it also involves forecasting, which I'm not defending the Fed, but I think part of the reason they mention this is, no, I'm a realist. I'm telling you like it is. Part of it is forecasting, and they have to look ahead and say, if we raise rates too aggressively, as they did 2 years ago, or the forecast was too aggressive, that does hurt the economy. So I think in a way they're justifying why they aren't being extremely aggressive about these rates.
All right, guys, as long as they keep politics out of it, I think we'll all be okay. Thank you both very much.